What's up, y'all? Welcome back to the channel. In this video, I'm going to be going over my daily bias and the steps that I take to find a trade each and every day. So let's get into it. All right, so the first thing first, when I first come to the charts is I need to have a higher time frame narrative. So what I do is I go to the daily time frame and I'll see what the previous day did. As we can see here, Monday came and took out this previous week's high right here. And then we got price closing back inside the range. So with that understanding, that we already took external liquidity. As you can see here, this is external liquidity right here. And it's obvious that price wants to sell because we rejected these highs, took liquidity at external, and now price is likely to go take internal liquidity. So the first thing we want to identify is what is the liquidity that price is going to want to come target. So we can see we have a fair value gap right here. This would be considered our internal range liquidity. And then we also have this previous week's low right here. So, or not even the previous week's low, we just have Thursday's low. So previous week low is going to be down here, which this is our third target that we can target. So going into this day, first thing I want to do after identifying where our internal range liquidity is and where price is going to want to go, I like to draw out my previous day's range. So what I'm going to do here is draw out the range from the low to high, and I want to see how price reacts inside these key levels as far as the 0%, 25, so on and so forth. So with this daily range right here, the next thing I want to identify is going down to the lower time frame and seeing how price is reacting to this zone. So I typically like to go to the 7-hour and or the 4-hour, depending on what price is showing me. So we can see here on the 7-hour, we getting this displacement candle down. We also have a fair value gap and an inversion fair value gap in here. So this could be our key level that price is going to, we want to see price react off of, or price can just respect this previous 7-hour candle and continue lower. And as we can see on this 4-hour time frame, we pretty much got the same thing. We ended up getting this change of state delivery right here. Price is going to do one or two things. It's going to come back inside this gap, or price is just going to respect this previous candle and continue lower. So we'll just press play up until price either react to the zone, and we'll see what price do after that. So we can see price just continue down. And then we see here at 2 a.m. price came and took this low. So this would have been your first target, like we said, the fair value gap internally. Then you got this previous Thursday's low right here. And then now the last target is going to be your previous week low. So as we can see, we're literally inside of a candle 3. So if I go back to my daily, we can see that we had this candle 2 closure where price had swept those previous week highs and closed back inside the range. So we expected price to come inside this previous day's range and give us a candle 3 to the downside. So what that means is obviously you got accumulation here with these two candles, manipulation, and then we're looking for distribution here as long as price rejects this current candle. So as you can see, we seen that price done that on the 4-hour. Inside this 9 o'clock candle, you'll have your 9:30 open as well. So if you don't know, at 9:30 price tends to give you a Judas swing, meaning that you'll get a candle where the price is going to go in one direction and then it's going to end up going into the opposite direction. We call that a Judas swing. It's like a fake out move when the New York Stock Exchange opens. So we have that here within this 30-minute, within this hour candle. We also see that price is holding this fair value gap right here, and we're getting a candle 2 closure coming out of this zone right here as well. I like to see price giving me a candle 2 closure, and then we can trade candle 3, candle 4, so on and so forth. So as we can see here, price reacted to this fair value gap, and then price started making its way down. So we got this candle 2 closure where price has swept this high and these small highs here. You can see right here, these small candles. With this candle 1 being the first initial drawing liquidity that price wanted to take on this hourly time frame, which they have it at 8 o'clock. And then you can see that 9 o'clock respect the 8 o'clock's candle and continue to the downside. So what I want to do is waiting on 10 o'clock, I want to draw my range from the low to high or high to low. And I want to see how price reacts inside this candle, because we have a closure below the previous candle and we know our drawing liquidity overall is down here at the previous week low. All we want to do is see how price react from a 5-minute standpoint inside this range to see if we get an entry and then target those lows. So let's see what price gives us. So we can see price is making its way back inside this range. Now, this is where we want to see price starting to respect this previous candle's range. So right here, I got this indicator. It's showing the 1 hour, the last 5 1-hour candles, and we got the last 3 4-hour candles. So we know that at 10 o'clock, price give us a new 4-hour candle open, and also give us a new 1 hour open. So I like to use this indicator to show me what the previous candle did, how did it close, because if we had like a sweep below here, then we'll probably be looking for price to go back inside the range and give us some type of retracement or reversal. But in this situation here, obviously we had a continuation candle to the downside. We just want to see price come back inside the range and continue back to the downside. So as we can see, price is reacting to this order block. So all I'm going to do is I'm going to wait for, obviously we're in a macro time now, but I'm going to just wait for this change of state of delivery right here, as we can see on a 5 minute, or you could even went to like a 2 minute, 1 minute to give you a better risk reward. So we can see here at 10:04, we got a change of state of delivery. So if you wanted to enter based off of that right here, and then you put your stop loss right above the swing high, and then you just target these lows right here. And we're going to see how price plays out. So as you can see, price started making its way back higher. We hit our stop loss right here. Price eventually will hit your target. So this is how I find my daily bias every single day in the market. So let's recap real quick. So what we had here on the daily is we had price taking out these previous week highs right here. So you got this candle and this candle. Price didn't break above neither one of them. So we have a candle 2 closure with this candle, because this was the candle that manipulated the highs and then closed back inside the range. And then we have the first candle's low as a target that we want to see price come into. You have this inversion fair value gap. Well, it's a fair value gap, but it turned into an inversion fair value gap afterwards. So we got this fair value gap here. That would have been your first target. Here would have been your second target at the candle 1's low, and then the previous week's low would have been your third target, because if we go to the weekly time frame, we can see that we swept the high. This would just be a candle 2, whereas though you can actually enter in a candle 2 to get to the candle 1's low and use that as a target. So with a shallow wick here, it's likely that price will expand lower. But when you have those long wick candles, it's not likely that price will continue down. So we like to see these small shallow wick candles like these, and then we can basically trade this candle 2 to the downside. Because if we get like a long rejection candle, then it's likely that we're going to have to trade the third candle to get to the opposite end of the range. But in this situation, you wouldn't have. So with that being said, we can go back to this daily. We see that we had that candle 2 closure, and it gave us an SMT with MES at the high. So all we're doing is looking to trade this candle 3. What we want to do is we're going to draw the range from the previous day's candle. We already expect that price should go lower. We just want to see price come back inside this area and give us some reaction. And I call this a golden zone or a reaction zone between 25 and 50%. But price, when it's very bearish or very bullish, is going to respect the bottom half of this, or the top half of this if it was bullish, of the range. So going down to the 7-hour time frame, we can see we had a change in state of delivery. Also had a change in state of delivery on the 4-hour, and price just respected structure and just wanted to continue to the downside. Price eventually got to that fair value gap internally, and then we took out that internal low here from Thursday's low. And then our last target would have been obviously the target that we had reached of the previous week low. But prior to reaching that target, we had a bunch of candles going to the downside. So if we go to our 1-hour time frame, we can see that price is just respecting all these up close candles, which we call order blocks, and these fair value gaps, and it's just break it down and break it down. So prior to even reaching our target, we seen that price was just giving us these bearish candles, and all we want to see is price respecting these down close candles. So at 8 o'clock, we came inside this fair value gap here. We rejected it. Price gave us a candle 2 closure coming out of this. So this is what I want to see. And all a candle 2 closure is accumulation, manipulation, and distribution, right? So you got a candle 1 when price is sweeping that candle 1. Candle 2 is the candle that's going to sweep candles 1's high, which would be accumulation, right? So we call this accumulation. So what I'm going to do is go down to my 5 minutes so we can see it a little better. So you got your accumulation. This is where price is just moving in the range. It's not showing you no real true direction. And then you get your manipulation going inside your key level. So we have this key level in the 1 hour. Price manipulated going inside that range. And then we want to see price reject from here to confirm that this is an actual reversal here. So on a higher time frame, this just looks like a candle 2 closure, right? On a lower time frame, this is accumulation, manipulation, and distribution model. So with that being said, we just want to trade in the direction of the higher time frame liquidity. So now we know that we got the manipulation, price broke structure to the downside, and now this is just going to be our distribution all the way down until price get to our level of liquidity. So this is going to be your distribution. Using the previous candle's range, all we want to do is see price respect 50% of this range. I actually had this incorrect. We want to do it from the opposite side. So like this. So we can see our price respects 25% and inside this golden zone. So going into the new hour at 10 o'clock, we just want to see price come back to this key level, which is that order block right here, or the price respecting this gap here. But we're going to use this order block. And then as price make its way to the order block, we just want to see a change in state of delivery. You can go down to your lower time frame, like I said, to get a better risk reward, which we got here. Stop loss around the swing high, and then you just want to go for your draw on liquidity right there. And as we can see, price almost stopped us out and then ended up hitting our target. This is how you guys can find your daily bias each and every day. This is how I find my daily bias each and every day using my AP distribution model. Keep watching, keep liking, subscribing, share it to your friends. Hit that notification bell. It's your boy AP Reese. I appreciate all you guys, and I'm out.